Hello guys, this is Prof from Bencov Forex Academy speaking. So today is a Monday and the market is just opened. So we are going to analyze our Nasdaq, our US30, gold and S&P 500 together in this video. Then in the next video we're going to look at DXY, GBP, USD and Euro USD. So without wasting your time, let's get right into it. Just a reminder, if you haven't subscribed to the channel, make sure you hit that red subscribe button and be part of our community. You can join our free groups on Telegram and on WhatsApp. The links are in the description below. Just make sure you follow those links and be part of our groups. I will also be updating this analysis as the week goes. I might not be able to do a video, but I can post pictures of the analysis in those free groups. The groups are for free, just to be part of our community. So let me just make a comment on this daily time frame for Nasdaq here. I personally didn't like how the price started going up when the market opened. I would have wanted this price to take out this low that was given here before price can continue to go to the upside. I would have expected them to complete filling this imbalance from this point to this point that was being filled all these days. But well, we didn't get that. The price just started going to the upside. That's what we were given. But if you remember in the previous video, if you didn't watch the previous video on analysis, you might need to watch that so that everything is just a follow through and a continuation of what we already talked about. So in the previous video we talked about this impulse here in relation to the point of interest where it began. So here we have an order block that you are seeing there. Whatever it is, a hammer or whatever, I don't care, but we have an order block there which has led to break of this structure, because this price should have taken out this to maintain order flow to the downside. But price did not continue going in that particular direction. What happened is it retraced from here after these several weeks. This is daily time frame, by the way. Then it started going to the upside, and we talked about the possibility of price continuously coming back with the low momentum or correctively back to filling this void and into the order block before it can go to the upside. That's a possibility that we talked about from a higher time frame perspective, which is the daily time frame. So that is still a possibility. But let's just go to the lower time frames, to H4 and the other lower time frames, and see what's happening there and what we talked about and what to expect this time around. So this is H4. I will just bring back my analysis there so that we start talking about something that we have already been discussing. So this is it, ladies and gentlemen. This was that point where we're talking about the daily time frame perspective. So let's put it aside. This is the daily time frame perspective we're discussing. So last time, if you still remember from the video we posted last time, we were somewhere around here, at this point, somewhere around here, and we're expecting price to come back to tip this either 38 level or 50 level before we can get the buy. But unfortunately for this one in particular, this Nasdaq in particular, they didn't come back to our level. They just approached it, and from this point here we got that impulse. I didn't take this trade because it did not come to my point of interest. Remember, you need to plan your trades, and you trade your plan. That's what we do. So this one then was outside my plan, but you see the other ones that were actually in my plan that I took. So this is what happened. So what to expect now? So from this point, if you check here, they just came to chip off the top. But of course, if we use the closes of this, you see that this candlestick here has taken out the highs. So it's reasonable to say that this movement has taken out this structure, which shows a willingness to continue to the upside, which also aligns with my waves here, which is wave number 5 that I'm expecting. So as long as this correction here is not taken out of this low, I'm still expecting to be buying that. Let's just do a little trick there and see if it's gonna give us some kind of confluence. If you take your trend line there, then you take it to this point here where this impulse began. What do we have? Oh, okay, almost the same, isn't it? They just echoed a bit, but almost the same. So it is possible that this price is never going to come back and it's going to continue to the upside. But if you check this movement that has been given here, I only have kind of 2 waves here, which is a correction is the only that I'm going to have 1, 2, 3. I have these 3 waves, not 5 waves. So I'm tempted to think that this price should come back to this point. But what exactly now does that mean? Because now we have talked about a lot of things and a lot of ideas. Let's just go to the lower time frames to clarify what we are talking about and build a trading plan together. So this is what we have, almost equal lows there, which is not a problem. And I'm saying that this 1, 2, 3, to me, I wouldn't take this as a possible 5th wave. So to me, this alone looks like it's a big correction. So if it looks like it's a big correction, what I'm simply saying is it looks like we have something like this being A, then a B, and expecting a C. And that C, if it's going to be equal to this, it will take us to this, around this area of interest, which then comes in confluence with the beginning of this move, completing that void. So there is that possibility of price coming back to this point. But with that little trick of the trend line that I showed you, it's showing that price might not even come back to that low. So how do we build a trading plan now? So if you are a day trader, what you can do is let's put an invalidation level here together. Then if you put an invalidation level there, this price should either have come back to retrace from 61.8 or 78 level. Let's just check it out. If those measurements are there, then it would make sense from the trading plan that we are now building here. So there we are. Let's just take it right there, right? So we traced from 78 level, and since we traced from 78 level, what we're gonna do is I'm going to use these H1 order blocks here. So in particular this one, to frame our trading plan for this particular setup. So we are going to use these order blocks that are given here, basing on the fact that this price should have continued to go to the lower side, and it hasn't broken the high that sends the price downward. So if price, and on the other side, this impulse here started from this side, and this movement is not taken out of this low. What does that mean? In other words, we are saying as long as the price still have this impulse that is taken this high, and this retracement that has been taken the lower high that is taken the high, the order flow is still bullish. So because we still have a bullish order flow there, what we're going to expect is if this price should come back correctively into this, you will go to your lower time frames and frame a trade based on this order block to continue to buy to the upside, because everything else is pointing us to go to the upside. However, you need to keep in mind that we are still in a correction and everything has not been clarified. So because we are still in a correction, it's not a surprise that you might continue to get this crazy price action to the downside. Let me just take this price action and show you what I'm talking about. You might continue to get something like that coming to the downside, and something something like that coming to the downside before we can actually get the bigger buy we've been waiting for. Why are we saying that? Because number one, we didn't hit our Fibonacci levels, psychological levels, and right now price is not going up willingly. And remember, on the D1, I told you that D1 should have taken out these lows at least. That would have given us a bit of confluence. But we don't move candlesticks to do it. So we work with what we have. So this is what we have in particular. So what I would want to see here is the price coming back to tip off this one. Let's just go to M15 and see what we have. Probably maybe to clarify matters for us as far as this one is concerned. Well, yes, if I look at this, I'm seeing that this is 1, 2, 3, 4, 5, and it's possible to get if we get a correction that is gonna come to the levels of 78, 68.1, deep correction in confluence with an order block, then we can use that to buy this to the upside. So that's what we are expecting on Nasdaq. So let's move on to the next one and see what to expect. So right now we're looking at US30. For US30, there was this buy in the morning when the market opened, indicated in green, being invalidated by them taking out this low. But it's almost the same story with what we've been talking about on Nasdaq. But the difference is this one in particular came back to our levels as we expected. Then they reacted from this point and started going to the upside. So the chances of them coming back to tip off the 50 level is a bit low. But if we check how price is moving right now, if I just adjust this trend line a bit, I'm sure this price action is not hard for you to see. There is a possibility of them giving us a B-wave like that. Let me just change this green color to black so that you see what I'm seeing. There is a possibility of this price action coming back to the top here and then getting that sell. After that sell, then we can get the buy, and the sell will take us back to these 50 levels after completing these voids that you're seeing here, which is not bad. But for now, the buy already is moved. So what to do? Let's go to the lower time frames and see what's happening there and how we can take this. So on a higher time frame perspective, I'm expecting a buy. But that buy, you need to be careful about it. Why? Because number one, we haven't taken out the higher high because the third wave end. After you take this third wave end, then we know that price is now moving. But for now, it might just create a bigger version of a B wave there and continue to sell. I will show you the price action that I'm talking about when we get to gold. Gold just gave us something like, let's see if we can draw that. With something like that, then a correction, then something like that. So it's possible that it can give you something like that before it can continue to the upside. That's what we have on US30 there. Let's go to H1 and see what we have, the price action that we have there, and see if we can have a possible trading plan for this particular one. But the chances are low. Why? Because the price is already moved. Let's remove that. Okay. Let's remove that and that little tiny bit. Right. So this is where we are and what we have. Like what I was saying, that this can actually be a correction version before we can get another leg similar to this to get a sell to these points. So what should we do now? As long as we haven't broken up this order block here, you need to know that we are still in a correction and you need to manage your trades well. So those who are in a buy, that I gave in the morning, in the setup that I sent yesterday evening, make sure you're managing this buy as well, and make sure now your trade is now on break even, because I'm sure you're sitting around here. Make sure you push this trade to a break even, but also keeping in mind that you might, after taking out this high, you might need to take up your partials, because price might retrace back to the order block that we have taken this high. That's for management. Then what to do? We wait for price to see if price is going to break out this high. If price breaks up this high, then we know that we are in a fifth wave, and we start pushing up our entries. We then look for corrections above and continue to push up with the trend. Let's just check M15 there and see how we are doing. M15. Right, so this is M15 there. M15 is not as clear as we would want. So let's wait to see what's going to happen at this point here. If they take up this high, then we know that there is willingness to push to the upside. But keeping in mind that this is a possibility. Let's just put this there. You take this trend line to that top. Keeping in mind that this is a possibility that they might just come here to balance off this channel and start going to the downside. Well, this works, ladies and gentlemen. If you want, you can try it in your charts and see how price has been performing and how you can make use of that. Let's now move on to look at the next pair. We are now looking at S&P 500. Let's look at S&P 500 and see how it has been performing. We are now looking at S&P 500. So everything the last time we talked about S&P 500 was somewhere around here. Then we got that dip to our point of interest and a buy. And the buy took out the previous high and came back to the order block. Now we are pushing up. The story is almost similar with US30 and Nasdaq. What to expect here? We wait to see how they are going to react in this zone. Let's just indicate the zone. It's still the same thing. We wait to see how they are going to react in this zone up there. If they are going to break above and stay above, then we know that we are now in a fifth wave and we continue to buy. But for those who missed this buy based on break of structure, break order block that led to break of structure on lower time frames, the order blocks are here. Then there is no story there. The buy is gone already, so you don't want to chase the trend. You wait for them to go up to this point. But keeping in mind that the way price is moving on this first impulse, we were not given 5 waves. It's rather, it looks to me like it's just 3 waves. 3 waves is a correction, it's an ABC. So if this is a correction, it means it's correcting this wave, which gives us a possibility of getting, after that, getting another wave that will bring us to these levels before we can get the buy. So with these particular things that we're talking about, you need to be careful. You need to make sure that you follow through your trading plan and the proper risk management as you take this trade. Yes, we say no risk, no story, but sometimes you just need to make sure that you manage that risk well, because if you fail to manage the risk, sometimes you will lose everything. So that's what we have on S&P 500 there. This is order block. We were talking about that this is break of structure, back to the order block that led to break of structure. Now we wait for them to maintain order flow by breaking this previous high. If they fail to break this previous high, then we know that this indeed is what is an ABC correction, and this is going to come to check out these equal lows to these levels, and we continue to buy. That's for management purposes. But for those who are already in a buy, let's enjoy the buy and manage it well. You might need to take partials based on those facts that we've just laid out. So let's move on to gold and talk about gold. we're now looking at gold. I talked about this price action being possible on those three particular indices that we're talking about. That we might get this correction before we get the C wave and then start going to the upside. So on gold, I'm still expecting us to keep on pushing to the upside to these levels, like we said the other day. Let me just copy this line and see what happens. So for targets, not to say that it's going to be 100% to this point, but for targets, you might need to target these confluence areas where you're seeing the invalidation, this other trend line, and this trend line. In these areas, you might need to target those areas. So what am I expecting? I'm expecting this let's just do it together there. As you can see that this impulse is broken structure. So what I'm expecting is I'm expecting a retracement to let's just do it together there. So I'm expecting a buy from either this area here or this area. So if we are looking at this area there, I'm making use of this order block that we are seeing there. So I'm expecting to buy gold from this area there. Just after a little bit of a drop, then we can buy from this area there. But it doesn't make, let's go to H1, and it doesn't make much sense to expect it to buy from this particular area, because it looks like it's giving a correction there. So this correction is some kind of a flag or a channel. Let me just show you what I'm seeing now. As we build this trading plan together. So what I'm seeing is I'm seeing this a possibility of this developing into a proper channel like that, something like that. So if it's going to develop into that proper channel, coming into this order block, let's just have the measurement and see if that makes a bit of some sense. Right. If it's going to come into these 50 areas, 61.8 areas, this order block, mean threshold, then sell a movement that is almost equal to this one, then we are looking at coming back to a point where we have covered this gap there. So I'm going to try to, if you're going to take a buy from this point, remember it's a risky buy. But if you're going to take it from this one, it's a low risk buy. And if you check this one, it will be in confluence with your support your level there, your trend line, your support levels there, trend line plus Fibonacci plus waves, then it will make particular sense. So what will be happening there is this will be your first wave, and then your second wave, your third wave, your fourth, and your fifth. As we complete that. So if you manage to get a buy here, it's going to be a long-term buy that you can hold on to. So that's what I'm expecting this week on gold. I'll also give you an updated analysis given the price action that will get displayed today, tomorrow. Then we will then do a review of this analysis on Wednesday on gold, the S&P 500, and Nasdaq. Make sure you hit that subscribe button and turn your notifications on. This is Prof. Signing out now.